this computer. All right, good evening, everyone. Once again, my name is Basweti Hesbon. Professionally, my first qualification, I was a biochem teacher. I'm currently pursuing another skill in the field of tech. I'm passionate about fintech, finance, and technology. And actually, the idea behind the tribe concept that one day it's going to be a hedge fund. It's going to have a lot of features that we're going to use to impact people in the financial market as time goes by. I've been in the trading industry for some time. I came across Forex trading way back in the year 2016. I was discouraged by a few friends of mine that we used to do some business with some time back. Then I opened my eyes in 2019 towards late 2018, early 2019. Then I started seeing some light in the market from 2020 during the COVID-19. I've been here for some time, and my intention, or rather my objective is very simple. I want to give out people the right information that can allow them to grow and trade in the right way. That's why I don't know if some of my students or in my previous course are here. I normally charge expensive because I take this trading skill as a very, very, very crucial and a serious skill. So I always charge expensive. Other people I hear they complain, but that is it. So this evening, we are going to have our first topic, which is market structure, and I'm going to talk about a few things that will lead us or will develop us to the next, will guide us to the next subsequent topic. So if you are the one who is drawing on the charts, please stop doing that. If you're the one who is doing the annotation on the charts, please stop that, because if you continue, I might remove you from the meeting. So make sure you are keen on the chat. Kwenye chat. So I'll use both English and Kiswahili because I believe most of us are Kenyans. I don't know. I don't think if I have anyone who is from outside Kenya. So allow me to share my screen. Guys, can you confirm what you can see on my screen? Somebody to confirm if you can see my screen. What are you able to see on my screen? Somebody please confirm for me what you can see on your screen. What you can see. All right, perfect. So these are the things that we're going to cover this evening. Let me copy these links so that I don't waste a lot of time. Just a minute. Okay. Those who were here the other week, I believe wale ambao walikuwa hapa last week, they had a chance to get an idea of what you're going to learn tonight. I've shared something written market structure on the screen. Are we able to see that, all of us? All right. So I'll give out some backup materials. I'm not going to define things of what is Forex. That's not what I'm going to do. So I'll go straight to the point. I'll try to make things a bit simpler. So in the Forex market, we have different presentations of charts. We have the bar chart, the line graph. We also have the candlestick. We normally read price using the candlestick. The structure of a candlestick has got a body, a wick. I will drop, in the group, I will also drop the candlestick Bible, which is going to guide you about different or basic things that you need to understand about the basic things that you need to understand about the candlestick, right? Now, the candlestick is what we use to read the price in the forex or rather in the financial markets, because the financial market is so wide. We have crypto, we have futures, we have currencies, we have commodities, and so many other things that can be traded in the financial market. So the market moves in, I'll say, three major ways, whereby we will have the market either buying. And when we are saying that the market is buying, basically what it means, it is in that particular price action, the dominating participants are the buyers. The second way how the market moves, the market sells. Sometimes we call it, okay, hold on, somebody is asking for the password for the meeting. My goodness. Just a minute, guys, just a minute. I need to allow everyone to join the meeting. Just a moment. Benson is requesting to join. Just a minute, guys, then we go on. Hold on, check it here. If you have a challenge, make sure you have for you to attend this session, make sure your internet is a bit strong. Make sure your internet is a bit strong so that you don't have an issue. So I was saying this, that the market moves in three major ways. Either it's buying generally, or it's selling, or it is moving in equal measures, whereby buyers and sellers have not decided who is going to take over. And when you look at the screen, we have representations of different scenarios. Like when you look at this first scenario, this one here, this is a scenario that tells us that this market is on a bullish direction. You realize that we are having impulsive directions to the upside, and we have counter moves within the main trend. So in this case, the structure of the market keeps creating a series of higher highs and higher lows. Hence, we are having a scenario whereby the market is breaking structure to the upside. So here we have, this is a level we call a higher high, and this is an area we call a higher low. So allow me just to go to my trading view and draw this very fast, so that guys can see what I'm talking about, because I'm going to explain as I show you scenarios on the live charts, so that we can really get to understand this. So we have higher highs and higher lows, and the dominating participant in this scenario is, or rather in this direction, are the buyers. The dominating participants are the buyers. That's why we call it a bullish market, or rather bullish trend, or we can call it a buying market. Then in this other case, we are having a market that is selling. You realize that the dominant participant in this case are the sellers. We're going to create a series of low, low, and low, high. So these are zones that we call a low, low, and a low, high. Low, low, and a low, high. So when the market is generally selling, in a maanisha, those people are in that price action that are dominating are the sellers, or rather the selling pressure is very high, or the volume of sellers is high. And when that is happening, the market cannot move without supply and demand. We must have buyers and sellers for us to have the market move. The market will never move in a straight line like this or like this. It can never move like that. It might move in that kind of move, but it will be creating a series of, because buyers come in, sellers come in, and all that. So as we go on, I'll teach you advanced levels on how you can understand that buyers are about to come in, sellers are about to take over, because my strategy can allow you to trade both. You can do what you call hedging. You can buy at the same time you're selling. You have one running position that is buying. In between, you're taking some sales. and vice versa for a scenario whereby the market is generally selling. Are we guys following? Let me see on the chat section if you guys are following, if tuko pamoja. I want to know if you guys are following. Let me see a reaction on the chat section if you're following. Let me know. Right, so we have that. And we have now, after the bullish move and the bearish move, the other one that we have is a market that is moving in a sideways kind of direction. That simply means the market is moving in equal measures. Buyers and sellers are, it's like they have a balance, buyers and sellers. We are not moving past these highs and you're not moving past these low. So in such a market, I always say avoid such kind of a market until you see a clear break of direction. I mean a clear break of structure, so that you get to so that you get the people have just joined us. Let me give them the link. So yeah, so we need to understand that. So these are ranging market, and then we have what you call the retracements, the pullbacks, and the counter trend. In between the trends, we are going to have the moves that is against the main direction. So for example, in a scenario whereby the market is buying, these cells that are in between are what you call the retracements, or rather the pullbacks or the counter trend, because the main trend is bullish in this scenario. But here, this where I've marked with a green line is what you call the counter trend pullback or retracement. And for the selling scenario, when the market is selling, when the market buys in between, that's what you call the pullbacks, or rather the counter trends, retracement. So as a trader, every time once you identify the direction, or rather the trend, you are supposed to wait for a pullback so that you can add a position towards the direction. So I always tell even my mentees, the first thing that you need to be right with is direction. Once you understand the direction of the market, it's easier for you to make money. But if you're wrong on the direction, chances of losing is very high. So the first thing as a trader you need to really master is understanding how to plot a direction so that you can take a trade towards the same direction. So I want to show you, I will focus on this first area where we have types of trends. Going to the charts, try to show you scenarios of a bullish market, bearish market, and then if time allows, I'll talk about the categories. If time doesn't allow, I'll talk about these and these tomorrow, because I really want you guys to understand. That's my intention. So let me go to my charts, and I want you guys to suggest for me any pair that you want me to use for the purpose of learning. I know many people will say gold, but I prefer a currency pair so that everyone can have a chance of learning. Which pair do you guys want us to look at? Maybe you can use either USD JPY, Euro USD, GU, any pair? I'll prefer not to use gold because we have beginners here. Apart from gold, okay. We can use USD CHF, and we can use GJ and GU. So let me start with GBP USD, for instance. Oh, today we did analysis actually, so that you know, we are waiting for, as far as I'm concerned with the members in the comment, we're waiting for price to come here so that we think of selling. And these are zone that the morning I told guys that the market is bullish. So yes, once price comes to this level, we will look at what happens. If whatever we want to see happens, we're going to sell. And we're going to target maybe 1 to 5 or 1 to 5R or 1 to 10R maximum. So I know as we go on, you guys are going to understand my strategy. So if you already have a strategy that you're using, if you're an intermediate trader or an advanced trader, don't worry. So long as your strategy is working, you can still learn mine. If it makes sense to you, we can trade together. Now, let me use a different broker. And use Oanda. So this is GBP USD. I want to show you guys an example. I want to show you guys an example of Delete all these. I want to show you guys an example of a bullish trend, a bearish trend. We can even, in fact, we can start with what you are seeing on the screen. I'm able to see some kind of a bearish trend. This one here, we have a bearish trend that is here, and this trend, it has got swing points. So the swing points are the zones whereby we are having the impulsive moves originating from. So in this case, we have this highest level for this particular price action. Then we have this low. We also have this high. Going to label all of them. As I explained, there's some basic concept of liquidity. All right. Now, those areas that I've labeled, those are the swing points. So in this scenario, we are having some kind of a bearish, we're having some kind of a bearish trend. So this is like a bearish trend whereby the market is generally selling on this specific time frame, which is the daily time frame. Right? Now, so we have a bearish kind of a market. So on this bearish market, before the market started selling, initially we could see this market buying. From here, we were having some bullish move. Before this market continued selling, we had these bullish moves. Right? Now, when you look at these structures very well, the last area that we had buyers before the market sold, I'll probably say it's from this level. Although this broke our hand because we had a break of structure here. And when I'm talking about a break of structure, we must see a body candlestick closing above the wick of a swing point, depending on the direction of the market. So this was the last area I would probably say we had some, although these candlesticks are a bit confusing, so but we can still use this. So this is the last area as far as I'm concerned. I'll say we had some sort of, so okay, let me just do this. We had break of structure here, was the body candlestick closed above that. Okay, let me just label this very fast. So we have BOS. We have a break of structure to the upside. Then, before this impulsive move happened from this origin, this was the most immediate area that caused price to the upside. So as far as I'm concerned, then now this area, for me, this becomes my shift point. Other people, I know they use the word change of character. So this becomes my shift point where price shifted by having a body candlestick closing below, that wick. So here we have what we call a shift. And the market from there, we started seeing the market selling. So at that shift that we had, before the shift continued, or rather the bearish direction continued, we had a slight structure that was created. I enjoy seeing such kind of transaction. We had this structure that was created, right? We had this structure that was created that pushed price to the downside. Allow me to remove these circles so I avoid confusion. I was highlighting them for the aspect of the swing points. So I'll just label them. So here we have, I'll probably say this is like a low. Okay, we start from Aleju. This is like a high, and then things changed. From that level, you can see things changing. So from that high, because initially the market was, the previous direction, the market was bullish. So after things changes, so this becomes basing on my shift, this becomes a higher low, a higher low. Before now, we started having a series of, before we started having a series of low, low, and before we started having a series of low, 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 and low, high, low, low, and low, high. So all these are swing points. We have the minor structures and the major structures. So we have low, low, and low, high. Now, from there we have low, 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 high. Remember, we have the major and minor structure. So we have another low, high at this area. Then we have another low, low. We have another one here. Another. This. We have another low, high. And we have another low, low at this particular level. Then here we also have another low, high. We also have this low, low that is around this level. This is, remember, this is daily time frame. So you need to understand how to label these things. And then here, sorry, above this area, if you refine very well, we have a low, high here. Because as this market was going to the downside, let me try to zoom. As this market was trying to go to the downside, hii ndio ilikuwa penye shift ilifanyikia. So tukaanza kuwa na hizo series. So at my advanced levels of liquidation, as long as the market had a body candlestick closing above this area, this also becomes again a shift. This becomes a shift. Other people will call it a change of character, but may call it a shift. So there's a shift there. And then we have an area of liquidity, which is an order block. To those people who understand order blocks. But for me, I call this an area of liquidity, which is a type 1 area of liquidity. So in fact, today when we are doing our analysis, we are looking forward to see price coming to this level. And there's something that will happen here to give us more confidence to sell massively. In fact, I'm expecting the dollar index to be bullish for some time, although we are in the last month of the year. Maybe as we go on, maybe on the last day of this masterclass, I'll do analysis as I show you my long-term projection from the aspect of swing trading. All right. Those who have just joined us, our topic today, we are talking about the 3 moves in the market. We are talking about the bullish, bearish, the sideways. I'll talk about the pullbacks, retracements, and so on and so forth. So this is just an introductory class. I'm trying to label the swing points using a simpler concept of low lows and low highs. So when you have these is a scenario whereby the market is, rather I'll say this is a bearish market. Are you guys on the chat following? Let me see a reaction. Let me see a comment. Let me get to hear if you guys are following on the chat section. So these are a bearish scenario. Are you guys following? Let me see a reaction on the chat section to know that guys are keenly following and planning. Robert, Levi, Calvin, again. Kasri, wow. Yes, that is Jonah, Sabila. I can see the meeting around 38. I expected us to be more than 50, but it's all good. Just go on. All right. So we are doing well. So this is a simple scenario of a bearish kind of a market, or rather a bearish structure. So if I can do an inversion, or rather if I can invert my chart, that means this is going to be a bullish. If I invert my chart, it's going to be a bullish trend because now the market is originating from the lower side to the upside. But I'm going to use a different pair so that I can give guys clarity. So this is a bearish scenario. So as a trader, you're supposed to focus so much on getting your entries. This is where we have those guys who are in Kitale. I mentioned this. We always have liquidities at the wicks. You see, If it was me who was trading, let me show you. If I was the one who was trading maybe at this particular area, this is what I could have gotten my entry. Let me show you. Those guys who are in the community, they understand. If I was the one who was selling here, I could have gotten my entry exactly at this area. You see this one? I could have sold exactly here. There's a way I do it. I could have sold maybe somewhere there. I'm just showing you. These are the things that I'll talk about. I'll show you my entry approach. I could have maybe sold there and have a stop loss of maybe 15 pips and target this low. If you look at that, that's already an RR of around 1 to 13. So there's a way we do that. So if you look at what actually price did, price react here at that zone, na ikaendelea sell. If I was to get another entry, I could have had it at this. So there's a way we do all these things once you understand the aspect of liquidation and all that. So we have that. So that's a very simple explanation of rather, I'll say a bearish trend, rather a bearish market structure. Is that clear? I want to show you an example of a bullish structure, and then I'll see if time will allow. I want to end this session exactly 9. Since it's a free class, I'll be doing 1 hour session every day up to Friday. And then once we are done with the master class, I'm going to give you guys a lot of materials. Those who are not in our community and they'll be interested to join in our community, I'll give you the guidelines on how you can join us. All right. So that is it. So let's look at an example of a bullish scenario, and then I'll do a bit of some different structures. So let's use a pair maybe like USD somebody recommended or we talked about that, or I can use USD let's look at USD It not necessarily okay. In fact, I have an example that I was using the other day. So when you look at this structure, let me try to. When you look at this, for example, this structure where we are at the moment, we can see some kind of a bullish. We can see some kind of a bullish market structure, rather bullish trend, right? You can easily see some kind of a bullish trend whereby the market is forming a series of higher highs and higher lows. So in this particular scenario, this is my higher high. This is my higher high, for example. Higher high. And then I have my higher low. This is my higher high. Hold on. I have my higher low, higher high, then I have my higher low. Oh, let me use that is this is a higher low, and this one is higher high. These are very simple things, but it's important to know. I always believe that once you understand market structure, other things can be easier. But if you don't know how to mark, if you don't know how to do the mapping, you're going to suffer. So another internal zone, these are higher low, then we have a higher high, another higher low, another high high. Hope you guys are following. You also have another high low. Guys, once you understand the liquidation process, your life is going to be interesting in trading. So high high, higher low. Then we also have another higher high, right? As you move on like that. Now, when you look at this clearly, the market is kind of buying, but it's not buying in a straight line. I hope you guys are seeing what I'm talking about. The market is not buying in a straight line. It's buying, yes, but it's kind of moving in some kind of a diagonal, or I don't know, something of a diagonal, something that is kind of diagonal, right? So this market is bullish. You see, it's bullish, right? The market is bullish. Market is bullish. So in a bullish market, what are the characteristics of a bullish market? We're going to have price impulsively moving from the swing points, which are the demand zones that will create the trend. So where we're going to have the body candlestick closing above the wicks of the previous swing points that were causing the counter trends, we call that area break of structure. And it will only confirm if we have body candlestick closing above the swing points against, from the pullback. All right. Now, in this case, let me try to go a little bit slower. Now we can start from the lower side. Now, this area where we have the higher low, this is the lowest point that caused this high, right? And this is the highest point that caused this low. This is the lowest point that caused this high. Are we together? Are we following? And this is the highest point that caused this low. So that's how the market moves. So once you are able to understand how to map the structures from the higher time frame, now when you go to the lower time frame, there's simple things that you look at so that you know how to get your entries, right? So we have that price moving from the swing points. Sorry. So where we have the swing points, that's where we have liquidity, especially on the wicks. There's a way you get to know that. So that's where we have a lot of liquidity seated. And you see, when you're looking at higher time frame, there's a lot of information that is hidden, and you can only see it on the lower time frame. For example, if I was to mark, let me show you. If I was to mark, maybe let me mark a random zone. Let me mark a random zone and show you guys something. Yeah. So for instance, if I may say, for instance, somebody is calling themselves fair value gap. Eh? Or Kenyans have got crazy names. Maybe strategy yake inaitwa anatumianga fair value gap. Probably that's the reason why this person is calling anajiita fair value gap. Anyway, are you guys learning? Are you guys learning? Let me see a reaction on the chat section. Are you guys learning? I want to know if you guys are learning and maybe you're enjoying this session. If you're learning, you're getting something. I know some total beginners, they might be not getting things, but as you go on, I believe things will be a bit easier. You can see we have Alvin, Ombati, Brian, randomly just mentioning them names. We have Dennis, Esther is also here, George, Javan, Jenny, Jim, Job, Kelvin, Kerry, Kim. We also have Elizabeth, Mina, Uyo, and many other people that I can see in the meeting. So let's go on. So we have what do we call it? We have a simple scenario explaining, or rather showing us some kind of a bullish trend, or rather a market that is bullish. Yeah? So I want you guys to understand something. Yeah? When the market is bullish, you see, when the market is bullish, we're going to have impulsive moves from the swing points to the upside. These are the impulsive moves. And then I'm going to use different arrows to signify the pullbacks and the counter trends. So maybe this is like, for example, the red arrows represents the pullbacks, because at this particular time, this trend is bullish. So this one, the red arrows represents the pullbacks, or rather the retracements or the counter trends. So most of the time, you'll hear people saying that don't trade against the trend. It's true. But I believe that as time goes by, once you become an advanced trader, you can always take a trade. You can even trade against the market, but you need to know where you executing your sell. You know very well that the main trend is bullish, but you can take some sales in between. Because when you're doing your analysis, you can take intradays at the same time you're having swings that you are. For example, once you identify maybe for instance that the trend is bullish, you are going to focus on buying. But the market doesn't just move in a straight line. You'll be having market buying, selling, so you can take any position. That's why you'll hear maybe, for example, today somebody says I bought gold and made money. The other person will say maybe I sold gold and made money. It depends with their strategy and what they're focusing or what they're exactly looking at the market, right? Now, so I want to I can still use this USD JPY just to show you something that is very interesting. Huh? I think I can just delete everything. I can just delete everything. So this is our area of interest. Huh? Those guys that were in Kitale, I mentioned something to do with cycles. I just want to mention that slightly, but I'll be talking about it deeply as we move on. So we have cycles. For instance, if I want to take a trade and I'm using the daily time frame as my time frame that is going to give me direction. So that means my daily time frame is going to be my constant time frame that guides me in terms of direction. So basically, I use either there's what we call situational time frame, and there's what you call constant time frame. A constant time frame, I can use a typical example of a family. When the father or when the man or when the head of the house says that we are moving from Kenya, we're going to Dubai. Once he says that, the whole family has to follow that because that means he has already organized himself. He knows that he has money to move from Kenya to Dubai. So what goes on? The mother of the house, who is the second after the father, is going to tell the kids, your dad has said that you're going to Dubai. The kids will not go against the mother, and the mother might not go against the father. Because when the leader says that this is the direction and he knows that clearly this is the where we're heading to, the other people like the mother and the kids, they will have to follow what came from the father to the mother and all that. So in a simpler way, now when in my strategy, when I talk about a constant time frame, it's a time frame that once it gives us a clue that we are going to buy, we're going to buy for the longest time. And there's a procedure on how we do the alignment so that we can narrow down to getting an entry at the lowest time frame. So for instance, I can use a simple scenario just for the purpose of learning, guys. Uh, I'm going to talk about, because of time, there are things I'll not talk about today. I think I'll talk about them tomorrow. I'll talk about the categories of trends. I'll talk about the key levels. Then after that, I'll start now talking about some things about liquidity and all that. So let's use an example of maybe, we can use an example of this level. Let's use an example of this level here. Let me show you. We can use several examples. Let's start with this zone. I'll show you how, if you are trading, how could you, for example, you open your chart, the market is maybe selling from up there, and it's coming to this downside so that you can buy. So I want to show you how could you use the aspect of swing points to get these buys to the upside, all right? So as far as I'm concerned with my strategy, I'll do this. So let me play back hold on, just a moment. So let me play my, what do you call it? Let me play my, let me play back the chart so that I can use it for learning purposes. Let's say you've opened your chart, you're analyzing, and you know that the direction is bullish. So for you to buy, of course, you will not buy at this area because in the rule of business, you buy with the most discounted price and you sell with the best or the premium price. So if you open your chart, yes, the market is buying. But if you buy here, you're buying at the wrong place. You could buy and then the market sell, and then later on it continues buying. So because you bought at the wrong place, you're going to lose money. It's very simple in trading. When you buy, the market should buy. When you sell, the market should sell. So you need to know when is the right time to sell and what is the best price to sell with, and when is the right time to buy and what is the best price to buy with, right? Now, so if I was to use a very simple example using my liquidation concepts or rather liquidity, so I will mark this area as my area of interest. Those guys who are in our Discord server, this is a type of liquidity we call, if John is here, what type of liquidity is this? This is type 5. Other people will call it an order block. For me, I call this type 5. So once I mark this as my area of interest, right? Once I mark that as my area of interest, I will only wait for the market to come to this level. I will only wait for the market to come to this level for me to buy, and maybe my first target will be at this swing point where the market originated from. And there's also a way on how you can think and find how you will sell from here. There's a way you can find how you're gonna sell from here so that once the market comes here, you buy. Those guys who are in our community know sometimes I can buy where my take profit is my next entry for the next move. It's a matter of just time and getting to understand all these concepts. Now, so if I was to buy, I've identified my point of interest on the daily time frame. So from this time frame, I'll go to 1 hour. I can use 1 hour and 4 hours. There's what you call the FTAs, which I'll be teaching you guys as we go on. So this area that I've marked on the daily time frame, let me repeat it, guys. This area that I've marked on the daily time frame, it's my area of interest, which is an area of liquidity. This is my area of interest, which is an area of liquidity, right? So on this same area, we have key levels. We have different types of key levels, and there is a way we identify them. So I'll narrow down from the daily time frame. I'll go to 1 hour and find if there's any zone that has not been mitigated within this, or if there's an area of liquidity that has not been consumed within this zone, that's where I'm going to buy from, right? So let's go. With the aspect of time frame coordination, I think I mentioned the aspect of cycles. So if I'm using the daily time frame, for example, if I'm using the daily time frame, from the daily time frame, I'll go to 1 hour, then 15 minutes. If I find an entry with a good stop loss, I don't need to go past this. Even if I go to 1 hour and find a setup that has got a stop loss that is making sense, I don't need to go lower. My rule with my strategy, currency pairs should not have a stop loss of more than 30 pips. I can compromise on gold, but when it comes to currency pairs, in fact, your stop loss is supposed to be between 15 to 20 pips, right? Now, we go to, so I'll use this. We go to 1 hour, this area. So when you go to 1 hour, within this zone, there are some deep things that you need to see. Within this zone, so hii area yote ni area of liquidity. Hii area yote the area of liquidity. There's something I want you guys to understand. When you understand, there's what you call liquidation. When you understand how price moves, for instance, hii market ilianza hapa, bought from here up to this level, came down, bought again, came down, and when it came down, it came near the opening, or rather, this key level, and then it went up. After going up, the market again came down. And then from there, it went up. So as far as I'm concerned, if I want to look for buys, I don't have any business down here on the 1 hour. So the area that I have a business that I want to focus on so much is going to, now my area of interest, I'm going to focus so much on this. Let me show you. I'm going to focus so much on, Enoch Kipkuria. Naona unachora screen. I don't know what's your intention, Mr. Enoch. So I'll focus on this area. I'll focus on this area. Even on the 1 hour, already, I'm able to see what you call, liquidity engineering. So I'm able to see liquidity engineering. In fact, this is some kind of normal liquidity engineering. So with this, if I measure my pips from that area of liquidity engineering and then it's not more than 30 pips, I can execute a trade. But if once the trade is more than 30 pips, I have to refine further. So with that area, I'll go to 15 minutes from 1 hour. I'll go to 15 minutes. Then once I go to 15 minutes, I'll see what else do we have within that zone, right? What else do we have within that zone? Just a moment. Let me use this line. Yeah, so what else do we have within these levels? So I'll go to H1 and then 15 minutes. That is 1 hour. So we have this area of interest. I'll go to 15 minutes. On the 15 minutes, I have a type of liquidity I call type 2. I have a type of liquidity I call type 2 based on how these structures are formed. So as far as I'm concerned, within that type 2, I'm able to spot reactive. It's a kind of liquidity engineering, but we call it reactive liquidity engineering. So at this area, I can have my entry here. If I measure the pips, they make sense. I'm good to go. So that's like 26 pips. For me, it's kind of still big, but we can still use that so long as it's not more than 30. So if I go to, that is 15 minutes. From 15 minutes, I'll go to 3 minutes. I want to see anything that is hidden within that, within those weeks, or rather within that area. Oh, my trading is not allowing me to go to 3 minutes. The historical data for this solution is available for this time. Okay. Anyway, so I believe there's something here. So if we were to trade, if we were to execute a trade, this could have been my best area to execute my trade. So I'll have my entry exactly here. Then I think I need to pay for more premium kind of trading view. So I'll go back to daily time frame so that I can show you where I'll have my first target. Yeah, in fact, it's there. So this is a zone whereby I'm going to have my entry with a stop loss of not more than 30 pips. I feel like I should refine more, but so that I have my entry at the tip of that area of liquidity. So with this now, that's a zone that I'll expect, and maybe have my first target at this level. So if you play price, that's a zone that I expect to see the market coming to before it buys. In fact, that's where price tapped. After tapping, we could see it going all the way to our target, So because of time, from there we went for our TP. Our TP is here, for instance, which gave us an RR of around, it's supposed to be in fact 1 to 15. This is a USD JPY. This one is supposed to have a stop loss of not more than 15 pips. It's only that I didn't see, there's something that is hidden here that I'm not able to see. But with what I've already shown you, you can clearly see I got my entry based on, there's a type of liquidity on 1 hour. I went down to 15 minutes. I got what we call liquidity engineering, which is one of the types of liquidity engineering. We have three. Those are the things that I consider when I'm executing my entries, which I'll talk about maybe on Wednesday. So because of time, I don't want to go past here. I want to maybe, we spend a few minutes, we ask questions. It's already 9. I'll spend maybe 5 or 10 minutes. I have questions from you guys. And then tomorrow we're going to have our next session. Maybe if you have learned something, also you can let me know in the chat section. I believe feedback is what tells me that guys are learning. And yeah, that's what gives us the ability of knowing if you are making a progress. So on the chat section, is there anyone who has a question? And you can also type on the chat section if you have learned anything tonight, or if you're learning anything. If you have learned anything from this session, let me know. If you have a question, I'm going to spend the next 5 to 10 minutes to answer those questions based on whatever I've just taught you guys this evening. I'm just reading your chats. I'm reading what's on the chats, so feel free. Lavi, I don't know if it's Levi or Lavi, no, mkono. So I can unmute you so that maybe if you want to speak up, you can. Let me see, Lavi, no, mkono. You can go on. You can go on. You can unmute yourself, huh? Yes, Lavi. How many Levi? I'm not sure. I can see your hand is raised up. Whoever is saying I repeat, I've recorded everything in this session. I'll upload it on YouTube after this so that you can go and watch immediately. I'll upload after this session, I'll upload it and I'll share the link in the WhatsApp group. Then you can. No. Samuel, this is not, I'm going back on price and showing you what can happen in the real market. It's not what happened today. And then it's just the intro. Yes, I see a ton of value already. Wow, that's so powerful. From Georgia. I know by the end of this masterclass by Friday, guys, I know two things will happen. If you're a beginner, you will get something valuable. If you're an advanced trader or an intermediate, there are some things that will be added into your strategy and they will help you have great entries with good risk to reward ratio. So Lavi is saying he's not able to unmute him. Okay, Lavi, you can go on if you have a question. I see your mic is unmuted. Oh my goodness. All right. I'll just go on as I read the chat section. So if you've learned anything, please feel free. Bearish and bullish trend, well taught. That is from Jonah. I think he's in the community. He's a trader who's been here for some time. Oh, out of 48 people, I can only see less than 10 reactions.
Hello.
Yes, Lavi, I can hear you.
Can you hear me?
Yes. Maybe you can okay, turn off your camera so that you don't have the lagging or whatever. You can turn off. I'm not sure if you're using two devices or I don't know. But you can just turn off your camera and go on.
Yeah.
Right.
Oh, yeah, I'm using two devices. Maybe it's the reason why I'm unable to unmute one.
Yeah, right now we can hear you. Go on.
Okay, thank you so much for this opportunity.
Mm.
Personally, I'm happy because as a beginner,
yes,
was introduced by someone else before, but then he left me on the road.
Yes.
So I was kind of confused, and I didn't know how to proceed. But through this session,
yes,
I can really say that I'm glad that I've learned a lot. I've also realized that we don't even trade just one currency because the person introduced me only on gold.
Oh, that's interesting.
I didn't know that there are other currencies that people do trade, but at least from this session, I've learned that there are so many of them.
The financial market is so wide, but I always also say that you can't become a master of many. You need to narrow down to specific, maybe pairs, or asset class, and that you can focus on. Those, I believe, some of my mentees who have been here, who have been in the community, they're here. I always tell people at least don't have more than 3 pairs. You can have like maybe one pair that is very volatile, the other one is low. It depends. But my strategy allows me to trade anything that is moving on the financial market. As long as that thing has a candlestick, I will trade it. But for mastery, you can't be a master of everything. I trade mostly gold, Bitcoin, and JPY pairs, mostly. Right? That's a great feedback from Lavi. Any other person from the chat section? I can see Calvin. I was told
I
that
just wanted to ask a question.
It's okay.
Yeah. Okay. My question was.
Yes.
Okay. Sorry to ask if I'm going too far than what I'm supposed to learn as a beginner.
It's okay.
But you have taken us through the graphs and you have shown us about the higher highs and lower highs.
Yes.
So I was just asking about is it wise for someone to execute a trade at a point where there are higher lows
At
in
a
the
point where?
market? Is it wise for someone or there was higher lows, or maybe I can say a choppy market? Because
Okay.
from the from the graph here that you showed us and
Yes.
the way you are demonstrating for us, you said we could see they were bullish. The market was bullish at some point. So is it wise for someone to execute a trade or to end into the market at that point?
You see, what I'm just doing is a simple I am just showing you the simple of, basic way of mapping the chart. But when it comes to execution, you don't just execute trades randomly. You need to have a confirmation whereby, for instance, you have marked a certain swing point is your area of interest, maybe based on several confluences. And before you execute, you need to narrow down to what we call it, the lower time frame and get an entry. And again, uh, you don't just sell or buy from all the swing points. You need to understand which is a more powerful zone that has a high chance or a high likelihood of buying. So not all zones. For example, maybe if you can still see my screen, maybe somebody will say like, you see, okay, but the thing is, like you see this area, it's a swing point. For me, when I look at this zone, it's an order block. For other people. For me, it's a type of liquidity I call type 5. So if I was to do a refinement, I could sell from this zone exactly. And if I was to sell from this zone, I know where I'm supposed to exit. And once the market goes there, I'm out. My strategy is allowing me to, for every entry I take, there's a high chance my exit is the next entry. I mean, it's the next entry level. Guys who are in my community can confirm that. When I'm doing intradays, when I'm swinging, sometimes I can have swing trades and intraday trades whereby I'm selling from a certain zone, and where my take profit is, it's going to be my entry for the next buy. I don't know if I've gotten your question well, but the thing is, from the swing points, you don't just sell or buy depending on the direction of the trend. You must have more confirmations that allows you. So the first thing is marking the point of interest, right? And the point of interest could be in so many ways. It could be using an order block. For me, I use areas of liquidity. There are so many other advanced things that I use when I'm marking an area of interest. It could be a key level, and we have ways on how we mark the key levels. I don't know if I've answered you, Lavi.
Yeah, thank you so much. I have understood what you are trying to explain to me.
It's okay. Please make sure for the next 5 days you don't miss our sessions. I can see Hester. She's here. She's one of, I don't know if it's Hester, the one Hester. All right. From the chat section, I can see Roba. I have really had a good time in this class. Still waiting for deeper explanation for entry levels. From Kim, I can see Kim. Oh my goodness. From Kim, I can see I've learned a lot of. And thank you for your time. Lavi, okay, thank you so much for the answers. Oppo, how can you classify this type of liquidity 1 and 2? Can you do one more example? I might not be able to do one more example. I don't want to start doing a lot of explanation. I want to just be doing 1 hour session. That's why I want you guys to keep time. 8 sharp, it's a free class. Anyway, I'm just doing a favor to all of us. It's a free class. Make sure you join here exactly 8 so that by 9, Maliza, I can give room for questions maybe up to 9. Up to maybe 9:20. Esther, she wants to say something. I had to mute everyone so that there are people who don't follow simple instructions, they make noise. Esther, I don't know if you can be able to talk.
Yes, I am. It's open now.
Yes, maybe Esther actually, she's the one, she's in our community. Maybe she can say something about what I've just talked about. Don't spend more than 40 seconds.
Okay, today's session was very simple and easy to understand and very direct. I think I've been there, I've been listening, I've been learning, but recapping is very important and I love it so much. It's immersing. Immersing mara nyingine tena nashukuru. It's easy. Thank you very much.
Thank you. Wow, that's great. So these are people already in the community. She's a trader who's been there for some time. And a participant was okay. People are trying to record my sessions. I'll give you guys a link. After this, I'll put it on YouTube. You can go and watch. From Jim, I think tomorrow you should talk more about liquidity so that we get the concept well. I'll do a series of liquidity as we go on. I'll do a series of liquidities I'll do a series of, what do you call it? A series of liquidity classes. There is much that I know I'll teach you people. And once you understand the concept that I'm going to teach you, Even if you already have a strategy, I'm more of a liquidity trader, and there are some deep things that I know majority people don't know. So even if you already have a working strategy, after this masterclass, if you add whatever I'm going to teach you into your strategy, it's going to help you become so good. In fact, when it comes to the aspect of risk to reward ratio and all that, and entry. From Johnny, I don't know if it's a guy or a lady. For a first day, I've learned a lot. Your eloquence and the clarity has gotten me enthusiasm to learn more. I can't wait for the sessions you build more on liquidity. There is where I almost got lost. Thank you for the opportunity. Thank you so much. I think it's easier for me to teach because professionally I'm a teacher. I thank God I'm blessed. I know how to trade. That's why maybe I'm easy. It's easier for me to communicate. So that's from Robert, and then I mean from Jenny, and then who else? There's somebody. I think I've mentioned all the comments. We can go on, guys. You can as well do me a favor so that I can have the energy to keep on delivering this value to all of you guys. Somebody asking me, was asking me about our YouTube channel. I want you to do this. All of you, the 45 of us who are in this session, just a minute. I want you guys to do me this very simple favor right now, or maybe after this session. Just go to Instagram. I want to show you something on the screen right now. I've shared. Okay, I've shared. Can you guys see? Can you guys see our page on the screen? Somebody to confirm if you can see. Okay, I want all of you guys go to that Instagram page, follow that page. Then once you follow that page, my main account is attached to that page. You can follow me. As we'll be going on to these sessions, at the end of the sessions, I'll also be giving out some rewards in different ways. We are coming to the end of the year. The market, God has blessed us this year. We have made good money. So I might decide to give a lot of valuable things. It could be books, it could be merchandise from eTribe or from me. So make sure you follow that page and also follow my main account. Then I want all of you guys to come to this specific poster of the free masterclass where we have this poster. Comment whatever you have learned from this class tonight. Just go and put a comment there. I'll be using it to reward people at the end of the session or at the end of this masterclass by Friday or by Monday next week. Go and give out any comment based on what you have learned, whatever feedback that you want to put there. Please do that. And then from Lavi, I'm glad I made this team. Every day of this masterclass 750, I'm locked, and I think that's I think that's you. You are a teacher. A very clear and open explanation. Thank you so much, guys. I don't want us to spend much time. I think that is enough for today. Thank you so much for joining us this evening. Make sure for the next 5 days, guys, I'm dedicating my time to give you guys value for free. I charge my classes at 100,000. Some of my students who are here, they know. I don't joke with my time. So please, let me beg you, please take advantage of this masterclass. It could be something that is going to change your life so that when you start 2026, things will be different. Maybe you are a total beginner. Maybe you are an intermediate trader, one thing I'm going to assure you guys, by the end of this masterclass, even if you'll not get everything, but at least I know you're going to get something that is going to help you and grow. Thank you so much. I'm ending this session here. I'll put the recording on YouTube, and then I'll share the link in the WhatsApp group for the masterclass. Tomorrow, same link, exactly 8 p.m. We'll be there. We'll continue from where we left tonight. And I believe each session, you're going to learn something new. And at the end of the week, we're going to have some great impact. Thank you so much. Have a lovely night.